I'm Debbie Magnesi. I'm the Assistant Dean of Development at D'Amore-McKim School of Business, and thank you all for joining us today. For those of you that are joining us for the first time, this is our 6th talk in our series of D'Amore-McKim School of Business COVID-19 Resilience Speaker Series. My team has been working hard over the last several months since we all went remote to find ways to connect our community of D'Amore-McKim alumni and friends, to bring everyone together around ideas, to hear from thought leaders from the university, from the business school, and largely to give each other a sense of community during this time that we are socially and physically distancing. So we're really pleased to have you here with us today. Obviously, much has changed since we launched this series over a month ago. And our country continues to experience unprecedented turmoil and pain. And now more than ever, I think it's really relevant for us to be seeking out these types of connections, learning from each other, listening to each other. And so, I'm really glad that we have this opportunity to do that in our own way together today. So I'm going to give you a few logistics, and then I will go on to introduce our wonderful moderator. We ask that everybody mutes themselves and turns off their video. This video will be recorded, just as a heads up to everyone participating. We encourage you to write in questions to the chat box on the right side of the screen. And for the last 20 minutes or so of the talk, the participants or the speakers will take your questions. I think that's all for the logistics. So without further ado, I'm grateful to welcome Bob Lentz as our moderator today. As some brief background, Bob has been an executive professor and entrepreneur in residence at Northeastern for over 8 years. He's a member of the board of advisors. He is a seasoned investor and serves on numerous boards. Bob is an integral member of our entrepreneurial community. In addition to his classes, he serves as an advisor and coach to many student ventures. Prior to joining the university, Bob was a consultant serving as interim CEO for technology companies. He has served in senior executive roles with extensive experience in the technology industry, having been involved in the growth and eventual sale of a number of successful technology ventures. Bob is a proud Northeastern alum and holds an MBA from Babson University. I'm very pleased to welcome Bob today, who I will say from personal experience, I have seen as one of the most impactful and most loved mentors in the Northeastern community. So Bob, the floor is yours.
Well, thank you, Debbie. Thank you for that intro. So I know we have many entrepreneurs on the call, and I think hopefully this call and the contents of this webinar will be very helpful to them as they manage through this crisis. So today I'd like to really focus on getting the investor's perspective on how ventures should be managing. But that's also a role that these investors have, board members who not only are they managers and owners of these companies, but they also are mentors and coaches to these founders. And so I'd like to get their perspective, not just on how they manage these ventures, but how do they still coach in this environment. I'd also like to ask them about funding of new ventures. In my role, I speak to a number of new ventures that are emerging, and the first question many of them ask is, will there be money available during this time? And the last topic I'd like to address with them is, what is it like for them as people that have to manage their own investors and have to think about raising money, and what's it going to be like for them during this period of uncertainty in this marketplace, all right? So I'm really excited about the two panelists that we have today. Both have been successful entrepreneurs that I'd like to say climbed up the puppet strings to become venture capitalists and investors. And I'm sure if any of you are remotely involved in the entrepreneurial ecosystem of Boston, you know our speakers. Jere Doyle and Michael Skok. Both are great investors, great mentors, and I'm pleased that they're with us today. And I'd love to turn it over to both of them to do a little introduction of their backgrounds, their funds, and what kind of investing they do. And then we'll get deeper into the questions. So let me first turn it over to Jere, and if you could please introduce yourself, your background, et cetera, that'd be great.
Sure. And Bob, thank you very much for having me today. It's always great to see you and be part of what you're doing at Northeastern. I've always been so impressed by what you've been doing there, both the undergraduate and graduate students and alumni. So really very honored to be part of it today. You know, I'm a serial entrepreneur that then turned over into early stage investor. So I had two companies. One I started right out of school, and then the second probably about 10 years later. I'm a marketing guy, so both were in the marketing customer acquisition space. One was pre-internet, so I'll date myself a little bit. And then the other one was, sorry, although my gray hair dates me too. But then the other one was an internet marketing company. I started right at the worst possible time, at the very top of the 2000 dot bomb period. I ran that business until about 2011, and then I sold it, and I didn't really know what I want to do for the rest of my life. I probably still don't. So I just started helping entrepreneurs. I went over to the CIC in Cambridge and just started being an advisor, and realized that people in the early stage companies, they like advice, but they really like money. So I made a few investments and really enjoyed it. So I started my own fund called the Oyster Fund. And I've basically been doing that for about 9 years now, doing early stage investing, pre-seed, and seed is where I like to get involved. And then obviously I work with my companies and stick through many of the follow-on rounds. I get on some of their boards. Usually I try to just help from a distance. So that's who I am. That's what I do.
So thank you, Jere, and Michael, please.
So again, thank you all for having me this afternoon. I will say it's a really unique thing that Northeastern brings to Boston, which is not just the great teaching and mentorship, but also the co-op program. And we've had co-ops working with us since day one. It's been really special to see how much, first of all, the vivaciousness they bring, and how clear they are about wanting to make a difference as opposed to just show up and put in the hours. So thank you to Northeastern, to Bob, and to the whole IDEA program and all the entrepreneurship programs that you have on the campus. We're big believers and would love to support you in any way we can, not just today. So for my sins, I've been an entrepreneur for, I hate to admit it, 40 years now. I actually started as a teenager, so I'm not that old. But at 18 was programming. Hacking is a better term, actually. I would never call myself a programmer, truly. To solve problems for people on what were in those days programmable calculators and the beginnings of the PC. So we didn't have an IBM PC in those days, but the Xerox Stars and then Apple IIs, etc. So I've seen this industry through a lot of different change. And my net observation, which is why today is so interesting, is that everything goes in cycles. And these cycles are very typically driven by one of two things. They're either driven by a major technological change, mainframe, mini, micro, PC, internet, and now, of course, distributed, and we'll probably have yet another era that comes in when we have the blockchain and the ability for people to have trusted infrastructure. So I think it's going to be very typical that entrepreneurs see these cycles and wonder what they should do about them. And I'm fond of saying the following, which will introduce the second cycle, which is there are three ways you can react to them. You can either wonder what happened, which is not where you want to be, or you can see what's happening, or better still, you can actually invent what you want as your future. And so I'm hoping that we've got entrepreneurs on this call who are in the latter category and not in the wonder what happened category. So in order to inspire you to do that, let me talk about the second cycle that we're of course experiencing, which is you go through economic cycles, and sometimes they're driven by, in this case, a health crisis, and that's not in our control. And actually, unlike the banking crisis of 2008, which to a large extent was self-made, we actually have to live with this in a different way. We have to live with it and in a global way too, together. But importantly, we have to recognize, because we can't change that, because there's a cycle it's going to go through, for example, for us to figure out how to address the health crisis. We've got to be mindful of those timescales and respectful of them, and then just focus on what we can do to make a difference. And so just to summarize what my career has been, I've been through many ups and downs, including my own self-made failure super early when I was literally out of my teenage years and starting my first business. And that actually was the most informative and helpful thing. And so I'll refer to that failure as often as I can today to give you comfort that you can come out of these things and actually, then have tremendous success. In fact, usually stronger success as a result of it. So 21 years as an entrepreneur, and then the last 17 as an investor, and delighted to be here to try to be helpful.
That's great. Thank you, Michael. Can you talk a little bit about Underscore, though, and what kind of investing? I mean, your history at first Northbridge, and then you started your own fund. What is that? 5 years ago now? 6?
Yeah, I guess it's coming up to that. So Underscore, first of all, very active early stage, typically seed to A. We will do pre-seeds. We're happy to partner with Jere in ventures as early as we need to. And we're typically focused on B2B and SaaS. We believe software is driving everything, but also even beneath that, some major, what we describe as disruptive business model trends, such as open source. And we're big believers in what we think is the real essence of this, which is, enabling the next generation of entrepreneurs who are determined to use their expertise or even their experience, even if they've got, very little depth to that, sometimes coming straight out of college, but a unique perspective to go solve real problems that we think could be impactful in the world. So that's our joy.
That's great. Thank you. As everybody could see, Michael and I were friends from the Bronx.
Yeah.
So, yeah. So let me ask you both. I mean, we are seeing unprecedented blows to the economy, 40 million people out of work, the shutdowns of industries. Who knows what's going to happen in the IPO and M&A marketplace. And I recently had a venture capitalist in one of my classes, venture financing, and he said his advice to every one of his ventures is reduce your burn rate to have sufficient cash for essentially 18 months. Whatever forecast you're working with for revenue, cut it by 40%, and essentially no hiring. And that was his message to our class. What are you saying to your ventures? What's your message to them right now? Jere, let's start with you, if you know.
Well, I think the similar message is obviously, cash is important. So you want to try to conserve cash and conserve your expenses. I think some of the other things I'm telling my companies is, this is a time to invest in your product. This is a time to really strengthen your product, to make sure that you so that when the sun comes back out, which it will come out, you've got a really great product. So I think it's a time to strengthen your product. It's also a time to strengthen your team. There's a lot of opportunities out there to find people that maybe have left other ventures that are really good, and maybe make a trade, or maybe there's an open position that you really wanted to fill. So I'm not necessarily saying 100% hiring freeze. I have one of the companies in my portfolio that has really been looking for a great head of sales. They've got 18 months or 24 months of cash in the bank, and this is a great time to bring in a new, really good, solid VP of sales. So I think it's strengthen your team, strengthen your product. Also, if you have customers, you got to really take care of your customers right now. You got to make sure these customers are absolutely loving you, and you're doing everything you can to make sure that that's the case. And I think if you do those three things, you're going to be stronger. When things get better, which they will.
Well said, Jere. Maybe I could just chime in and say, we have a large portfolio at 72 companies, some of which are, really, really early stage, like they've just come out of our accelerator, and others of which are, pre-IPO, but obviously at scale that they have a lot to win. We've really at the highest level said, look, this is up to you, but here are our guidelines. Here are the way in which you think about it. First of all, the big message is survive and thrive. I don't think there's any way people should be in the mode of just, cutting to the bone to sort of survive this, and not thinking about how do you manage your business and turn this into an opportunity. There's actually some amazing new opportunities coming out of this. The new normal, we think, will actually be a very exciting place to be for those who've thought ahead about what's going to be like to manage remotely, to learn remotely, to work remotely, to play remotely, and also to congregate in ways that are obviously very different in a socially distanced world. So just as we've seen in the past, I think downturns give tremendous opportunity for entrepreneurs who are thinking ahead and thinking about how to play into it. And by the way, I'm not talking about people who just are saying, oh, COVID-19, let's go, turn everything towards being a PPE equipment company. I mean, that's not the point. There are, of course, opportunities to do that. But it's really companies that are thinking about 5-10 years out. What will be the sustainable changes in our world at large that are an opportunity for us to invest in? So that's the thrive piece. Now, if we think about realities, Jere said it very well. We do want to obviously conserve cash. It's your lifeblood. And we've also told our entrepreneurs not to expect to be able to raise financing unless you build real proof to earn it. And that's very important. It's not like the world has dried up. This is not a banking crisis as we had in the 2008 era. It's a health crisis. And so there's a lot of money out there that is still going to have to find a home. And when yields go to zero, which is basically what the Fed has done, everybody wants to find alpha. And that's what the venture business is all about. So there's actually a real appetite to invest in the next opportunities. Obviously, as Jere said, we're really a people-based business. We fundamentally, for example, Underscore's entire thesis is based on people and being community-driven. This is what our core community is really all about. We think about human capital as being the most important capital. And so, how do you enable your team? The ones that are already, obviously, considered to be part of the sustaining team going forward, they need extra training. They need the support. They need the investment. They deserve, in effect, the credit for being part of what will get you through this. And so being clear about that is important. If you are going to let people go, we've already got through that phase, I think, but we always say the same thing, which is cut once, cut deep, and make sure that there's no chance you're going to get through a death of 1,000 cuts by not coming back to the team that's remaining and really being clear to, to follow through with that. And there are lots of ways to be smart about this. I don't need to go through all the, different pros and cons of furloughing, et cetera. But whatever the case is, the team that's left needs your support. And by the way, they need your empathy. I was thrilled that Debbie, who introduced us all today, was honest enough to share that she had a 3-year-old in the background. Well, guess what? Whether it's dogs or children or it's, elderly parents, whatever, this is the reality that we're working in. So honestly, accept it and, be grateful that your team is sort of working in that environment and support them. And then Jere, you said customers. I think that was so important. We have a saying, for our teams, which is in this environment, treat your customers as prospects. Don't assume they're still your customer tomorrow because they may go out of business themselves. They may be struggling. They may be in a tough environment. And so finding ways to effectively re-earn their business every day and their loyalty and ensure that you're helping them be successful for their business, not for, obviously working with your product or service, is really the key. And we've seen some of our companies do outstanding things in that regard, including, literally volunteering to go and help them open their restaurants or establish a basis for them to be successful in their own regard. Now, when it comes down to it, I will say there's a pretty obvious thing here, which is, those that survive and thrive and back their team and look after their customers are in a very special place. And we think that the last man standing in some instances is going to be the winner in a lot of these marketplaces. And so don't underestimate what it takes to be, a player that succeeds in this environment to come all the way through and live to obviously be part of what is the new normal. And I'll pause there just because I think there are probably questions people want to ask, double click on this. But I think it's a fantastic time to be part of an environment which is really being given an opportunity to reconsider everything. And there are parts of this that have been fabulous learnings for me personally that I'm very grateful for. And I'm also at the same time wanting to stay very respectful of those that have had to go through this health crisis. First of all, I'm sorry for anybody who's had any loss. That is, unimaginable. Fortunately, in almost all cases that we've experienced, people who've had that have had it through some other prior health issue. But those who've got it and unfairly died, that is the worst of all ills. What isn't lost on anybody, though, is that those who survive are going to be remembering that as how lucky we are and how grateful we are to now go forward and take advantage of the opportunity we find ahead of ourselves.
Thank you, Michael, for that. So you were talking about some of your companies are taking, are sort of re-engineering themselves to take advantage of kind of the crisis we're going through. Is there any example you could talk about of how companies are sort of pivoting, changing their business model to take advantage here?
Yeah, I'll give you a few. So on the earliest stage side, there's companies like Popcart that are enabling people to find the best price for what they're buying and also where they can get access to it. So they pivoted from being price-oriented to being availability-oriented when everybody couldn't get what they needed in the way of supplies. They created a supply finder site that's been enormously popular. Or for example, Marlowe, which is actually, again, an earlier stage company that we just recently funded with General Catalyst and Firstmark. They were effectively a company that was helping people on managing productivity on their meetings. Needless to say, they've all gone online. And they were planning to introduce a product for Zoom. They basically turned what was going to be months into weeks to get a Zoom-based product out, not just to help manage productivity, but to do things that would enable people to collaborate on things like agendas, note-taking, and effectively becoming more engaged online. That's been extremely interesting. Or Friday, an app which was developed actually to enable people to work remotely and streamline things like their scrums and stand-ups. And of course, we're involved in some companies that were already enabling, remote work, like Remote HQ, which is just launched. And that's, basically a collaborative workspace for people to be able to pull all of their key tools in. So it might be their product that they're demonstrating, or it might be some customer that they're supporting. They're doing extremely well, as obviously this environment gives rise to it. But to give you an example of what doesn't work, and I won't mention the companies, I don't want to embarrass them. It doesn't work for companies to suddenly switch their value proposition to saying, we are going to do X for COVID-19. And we've already seen one of our companies get into trouble. Fortunately, it's a super early company by doing that because they lost their way. And I would just say the warning to entrepreneurs is, look, if you had something that was really worth solving and a problem that was big enough, that should not be disrupted by, even if it's 2 years or 4 years worth of, a new normal that we're living with, or who knows what. The kind of market that you should be going after or problem they're trying to solve should be much beyond that. It's 7 to 10 years on average before you build a sustainable business. So don't get distracted by this.
Thank you, Michael. Jerry, any
yeah, I mean, same
examples?
thing. I've got companies that this has been a little bit of an opportunity for. You would never think it sometimes. A company called Breezeway, they're in the travel business. Travel's been hit harder than anything out there. We've all read the stories. Nobody's traveling. So their business completely shut down. They provide software to vacation home rental market for these vacation home rental owners to manage their property. So with these they have no guests, so they don't need Breezeway. Well, what Breezeway did was the reason there's no guests, people are worried about travel, they're worried about cleanliness, they're worried about the germs. So they came out with a new program for safety and for safety inspection. And they put a whole app together and a checklist to help all these owners of these vacation properties go through the cleansing process. And they're rolling it out now in Florida, and it's become, like the gold standard for what these vacation homes need to have in order to make sure that their customers are happy. So, I think that's an example of a company that's in, a really rotten place. And they say, okay, what's the problem? Well, with every problem, there's an opportunity. Let's be the leader here. And they stuck their neck out and they developed this in a very, very short period of time. And now it's being used. I was very impressed by a small company that I backed called QCM, and they help museums and with guided tours and things like that. Well, during the time of the quarantine, all these museums got shut down. So they went out and they ran an incredible marketing program to help their customers, and even the people that weren't their customers, but people in the industry, get ready for the post-quarantine. They ran a series of webinars, they did tutorials, and the first week I think they had 35 signups for this thing. Second week they had 300. The third week they had over 1,000 museums that signed up to get information. So, and they're building their prospect list, and they're helping. They're saying, look, don't worry about buying us. We're going to help you now, and we'll figure out that later. So, another company that I work with called Car Now, they enable car dealerships to interact online with potential car buyers. Well, everyone thinks the auto business is in big trouble right now because of quarantine. Well, Car Now got out in front of it, and they're helping these dealers interact with potential customers online. So again, it's being creative. It's sticking to what as Michael said. They all three of these companies, they didn't pivot and start doing things completely different from what they did. They said, okay, here's our core competency. Let's leverage our core competency and extend it and make it better for our customers. And I think that line of thinking, it can be very valuable during this kind of time.
Yeah. So these are interesting, pivots, so to speak, in their business. But what about the fact that their current business levels, are they achieving revenue? Are they, their pipelines drying up? So how are you dealing with that and helping your entrepreneurs?
Well, pipeline definitely is drying up, and in two of those three cases, certainly, for the travel company and the museum company, it almost went to zero for a while. I think they've got to be resilient. I think they've got to adapt. They're probably going to, all of them cut expenses, whether that means reducing staff, a lot of G&A, maybe people are taking a small pay cut. I mean, you got to do those kinds of things, and it's difficult. But if you can extend the runway, you got to extend the runway. That's why your VC friends in your class said you need 18 months. We don't know how long this is going to be. Is it going to be 6 months, 12 months, 18, 24 months? So when you're in a period of unknown, you want to try to prepare for the worst. And that's why I think I'm saying 18 to 24 months. Because as Michael said, even if things come back, in the next, and they're starting to come back, by the way. I mean, business is being done. I mean, sales are being made, business is being done, money's being raised, but it's just, everything's harder now. And even when things come back in a bigger way, it's going to be more difficult to raise funds, and the valuations will probably be depressed a little bit. So the more you can extend your cash, the more you can extend your runway, the more options you have. And options are really, really good when you're running a small company.
Yeah, thank you. Michael, do you want to add to that, or?
I'll just pick up on that. I think Jere's examples of his businesses are wonderful examples of entrepreneurs really, turning on a dime. I love Breezeway. It's a great business. And what a great idea to go, make themselves the gold standard of cleanliness. I mean, that's just awesome. It's these stories that are so inspiring to me. It's what entrepreneurship is all about. And yeah, I think you said it very well, Jere. Options are key. Businesses that manage their cash and indeed engage their customers and figure out what's really, changed and where the opportunities are and open up new options for themselves are going to do great. They're going to thrive. But I will say one thing, we have to acknowledge the following. It's really hard being an entrepreneur. I mean, it's bad enough anyway. It's tough to go out there, as a first-time founder or a first-time CEO even, and, address a problem that hasn't been addressed before, may not even be recognized as a problem in some cases, might be late. And then convince people to get engaged with you, let alone in this environment where they can't even give you time, you can't engage them, personally. That's really, really hard. So I want to acknowledge first that the entrepreneurs that are figuring out how to survive in this crisis have my deepest respect, but also those that, are figuring out how to, get ahead of it. Again, I liked Jere's analogies there of, we're really going to make sure we get, customers engaged, first of all, QZM. What a great idea. I mean, don't try to make customers at this stage, make connections with them. So I think those are all great examples. The one thing we haven't talked about so far though, is what do you do if you know you're going to be out of cash and your business is not coming back and it looks like it's game over? And I don't know whether you have any views on this, Jere, but we have a heat map that we use to actually show our entire LP base, which companies were at risk, which we just didn't think were likely to have a value proposition that would hunt, and they were potentially out of cash, certainly within the year, let alone 18 months. And what did we do about it? And so I will just say that we've still left it in our entrepreneurs' hands to decide what they do. One is absolutely going to shut down. And by the way, I think it was the right decision for them. I think they would admit they were probably not the most committed entrepreneurs. That's a good outcome, actually. It's a good learning for them. They'll obviously take that and figure out the next thing. Another is unbelievably determined, and I think will find a way to survive. They've cut their business way back. Another in the middle is actually, I think, hosting one of the largest events online of the entire tech ecosystem right now. Is a company called Masari that's in the blockchain and crypto space, and they effectively are like the Bloomberg for blockchain and for crypto. I mean, they have hundreds of speakers today simultaneously as we're online right now, engaged in a conversation around what is the future of crypto and blockchain. And you know what? They've just been resourceful, and they've figured out how to be, profitable and engage in an event even that's profitable with the right sponsors, etc. So I think people are all over the map. The matrix we use, and we encourage people to use this for themselves, looks like this, and it's this simple. You've got your progress towards obviously your goals on the x-axis, and then you've got your potential on the y-axis. And if you're a high potential business that's making incredible progress, needless to say, you're in a great place. Unfortunately, there are very few that are like that in the early days. If you're one of the businesses that is just completely ground to a halt and actually didn't have a lot of potential in the first place, just accept that. Now's the time to kind of let go. If you're in one of the two other quadrants, I mean, it's pretty obvious to state this, but if you've still got incredibly high potential and you just have to be patient, well, then be persistent. Stick it out. Make sure you get your investors behind you and stay, focused on the prize at the end of the day that is in the pain or need that you're addressing in a big market. The most tricky one is the bottom right, which is where you've made a lot of progress, but there's really not much potential in the market, or maybe now it's dried up completely, or you've got competitors coming in. My recommendation is go consolidate yourself. Get bought, or obviously get smart and consolidate other people, but don't sit and do nothing. Don't assume that just because you've been very successful to date, that you're suddenly going to have a great outcome. In these environments, usually the opposite is true.
Thank you.
I think that's really well said, Michael. And I think, it is a time to have, really good self-awareness. And, I think that's important as an entrepreneur anyway, that and I think in general, entrepreneurs are pretty good at being very self-aware of stuff. But I think it's a very important time to take a step back and look at where your business is. And I think you're absolutely right. I think that bottom right quadrant, there are going to be businesses there, and some of it's maybe through no fault of your own. This is what we're dealing with. And I think the sooner you can recognize that, again, back to options, the more optionality you may have as far as potentially trying to make yourself part of another company. Maybe what you're building is more of a product than it is a company. Maybe you need more, you just don't have the cash to reach customers, but you have a really great idea and a good product. And if you become part of something else, they have cash, they have a sales force, so I think you got to look at it hard, and you got to be honest. And so this is also where you got to ask for help. You should have mentors and investors and, potentially a board where you can say to them, be honest with them, say, I just don't know if this is going to work. I don't see this planning out, and I'm worried about it. You have to be able to be honest with that, and then really open up and listen.
Jere, how are you encouraging, most of these are first-time CEOs, kind of the trap most first-time CEOs fall into is that they don't ask for help. Yet they're dealing with issues today that, they've never had to deal with. Most seasoned executives haven't had to deal with, all right? I remember laying off my first employee. I mean, I fretted it, all right? And now they're dealing with that. The psyche of their personal psyches are affected. They've got their own family issues to worry about. So how are you coaching them, and how are you helping them, get through these crises, personal crises?
It is a personal crisis because if you're an entrepreneur, your life is your business and your business is your life. And so it is very personal. And, I guess it gets back to what Michael was saying. I think we both understand that it's really hard to be an entrepreneur. Like, it's just the hardest thing. And no one really understands that unless you've been an entrepreneur, right? So I would encourage them to get mentors, have investors, get board members who've been through this. And if you've been through it, like I know Michael has and I have, you have that immediate empathy. And so you can listen, and what it's like to go to bed at night worrying about what you're going to tell your wife and kids the next morning that you may not be, able to, do the things you wanted to do, pay for the things you need to pay for. I mean, I've been in that position. And so I think you got to trust your mentors, and you got to be able to, I got so much help, through the 2001 dot bomb. I had an advisory board member that we'd call it the Doomsday Cafe. We'd go to lunch or we go to breakfast in this cafe once every couple of weeks. I would be like, just pouring my soul out to this guy. And he was awesome. He just listened. He didn't have all the answers, but he just listened. And he just maybe made a few suggestions. And maybe he gave me a hug, and he told me how bad he felt for me, and that just hang in there, be persistent, and it would just help me. Just having people that would listen to you is so helpful and so comforting. And there's many people out there that'll do that. So, I think you got to find those people in your life. And maybe it's not even somebody who invested. Maybe it's an old friend or professor or family member. I don't know, but they're out there. And I think we all do realize that this is very, very difficult times. And, I guess, I don't think there's been anybody out there that hasn't had a lot of help, at one point in their life. So you gotta just find those people.
Yeah, it's great advice. Thank you, Jere. And let me just turn the subject a little bit. So I know we have a number of entrepreneurs out there and who are thinking about starting a company. So what should they be thinking about as they try to meet investors? Is there going to be an opportunity to raise money? you know, what's your expectations as far as investors as to when you'll start, you know, investing? How do you see 2020 versus, you know, number of investments you're going to expect to make in 20 versus 19? And so how do you think about, you know, the investing environment going forward?
First of all, I want to acknowledge that these questions are really good, but I also want to include some of the questions I'm seeing pop up on chat. So some quick answers. So first of all, I think any investor approaching a VC right now needs to have the same rigor they would have as before, but with a longer time expectation, because VCs are going to, instead of being in the mode of, you know, playing FOMO, as I think one of the next few investors, I think it was Rob Go, said, you know, playing fold, which is they're worrying about not just missing out, but actually of looking dumb. And that's actually an important thing for you to remember. So finding a way to actually approach an investor and give them a chance to get to know you, as opposed to just jumping on, you know, what would be a typical bandwagon of, well, there have been 3 companies funded in this space, so I should be one of them because I'm, you know, the best entrepreneur. That stuff isn't going to work. Take the time. Secondly, you know, people are asking about valuations. Valuations are definitely down, but they were too high before anyway. And the earlier stage of the market really isn't affected that much because people honestly pay for what the potential is. And if the potential is long-term, it doesn't get affected by the very short-term. The only thing that happens, and you are seeing it happen, is later stage valuations tend to get affected when the stock market gets affected. As you've also seen, the stock market has been pretty divorced from this, a whole nother question that we could get into. And in terms of, you know, what do we think of activity? Actually, we think there will be fewer but higher quality investments to make. We've been in the antithesis of that. We've actually had more investments done in the first 5 months of this year than we did in the whole of last year. And that's probably because we were doing the work beforehand. And so we'll announce over the course of the next few months 6 investments that are already completed. And somebody's asked it here, you know, how do you handle a down round? Well, we actually recapped one of our own companies intentionally as part of reinvesting in them. And we did it basically to point out to the team that, look, it doesn't matter what you're worth. What matters is what's your potential to build value for whoever's coming in. And so long as you earn enough of the business going forward, which is the critical thing you have to fix as an investor, is the option pool, then the important thing is to have the capital to go out there and build value. So we're seeing a lot of interesting step changes in that regard. You know, we're not playing the game that some people are of, well, let's, you know, get double dipping with, you know, preferences and, you know, all these kinds of tools that you can use. We just don't think that's the right thing to do. We think that's actually, you know, anything that's not in the entrepreneur's best interest to build their business is a mistake. And finally, you know, people are asking us about, well, what's it like for us as investors and raising our funds? And it's no different. It's just the same thing. You know, we build funds for 10 years. So to think that our LPs are suddenly going to change their sort of view of whether they should support us or not would tell us that we had the wrong LPs. It's actually a key reason why we didn't take a lot of individual LPs. We actually took very, very few. You know, people like Dave Strom, for example, who was my original investor from Greylock, you know, 30 years ago in 81. I guess it's more than that. You know, those are people who are in this for the long haul, who know this. And otherwise it's, you know, the Boston institutions, the Boston colleges, the Boston hospitals, et cetera, they're not changing their mind over a, you know, even if this is a 2-year period. The thing we do have to be mindful of, though, is that some of these businesses are being impacted. You know, whether Boston has, for example, the same college attendance in person and how indeed the business model will play out, that's all TBD. And for the smaller institutions, that could be tricky. We're lucky enough not to have that problem with the names that we have behind us, but we think there's, you know, tremendous challenges there. And finally, the last question that's very current right now, which I want to make sure I address head on, is obviously, what are we doing to address this issue of, you know, Black Lives Matter and diversity and equality, et cetera? And I would say the same thing is true there, which is this hasn't changed anything. It's absolutely unbelievably horrendous what has happened over the last 10 days. However, we were always investing in hack diversity. We were always investing in underprivileged. We were always looking for an equal opportunity to invest in. And shame on us if it takes an event to, you know, to get us to focus on that. What I would say is important is that the community as a whole has a responsibility to make sure that we behave in an equal and indeed diverse way to make sure that everybody gets a chance to succeed in the future. And thank you again for the opportunity to be part of talking to that.
Yeah, thank you, Michael. Let me just ask Debbie. Debbie, you're looking at the questions. Are there some that we should be addressing right now, please?
So Mike just did a very thorough job of addressing pretty much all the questions that are in there right now, except one around supply chain and how that's impacting how China's role is impacting the world markets and countries wanting to fill the gaps. But I would actually ask maybe if Jere and even you, Bob, want to take a second to look at these questions and answer the same ones the way that Mike did. I think that would be very interesting for people to hear.
Yeah, well, on the supply chain, I mean, I think most small businesses that I'm backing, their technology, their software, so they don't really have too much of a supply chain issue. Although I do have one that's building some kind of a consumer packaged good company, and they did run into some supply chain issues in China early on in late February, early March, but I think they've resolved that. But I think for the most part, you're going to find from a technology software standpoint, you're probably not going to run into too many of those issues. You know, as far as are people writing checks, there absolutely are. I think I just would second Michael's comments on that. You know, it's probably a little harder to get people's attention right now. You know, most institutions and investors are spending a lot of time, a little bit more time on their own portfolios than they are looking at new stuff. Although, you know, that maybe was back in March, April. I think now things are opening up a little bit, and you know, all of our companies have their new plans. They've got, you know, they're starting to get through this, so we're spending a little more time now looking at new stuff. You know, the bar's probably been raised a little bit. I mean, and you know, but I think, you know, if you have a great company with a great idea and you've got momentum and a great team, there's still money out there, whether it's from early stage seed investors or the angel community. People are writing checks. Angels probably slow down a little bit more than institutions, just because angels tend to write checks, you know, when the stock market's up and they're making, you know, or they've seen some liquidity events, and you're not going to see as many liquidity events now, right? So everything's been extended a little bit, you know. So, you know, and personally, I had, you know, 3 deals that were, you know, close to, or if not days away from closing, liquidity deals from M&A transactions or private equity, and all 3 of those in March got pushed back. Now one closed last week, and the 2 others are still pending. So, you know, that for that to happen, that's liquidity that's going out in the market. Much of that's going out to local angels, and that's money that they don't have to go back and put back to work. So I think things have slowed down a little bit, but deals are definitely getting done. And I think, you know, Michael's point on valuations, I mean, it got a little bit out of hand on the early stage seed, pre-seed stuff. I mean, you know, don't worry about valuations. You know, find great investors, find great people that are going to help you through the journey. That's way more important than the valuation, way more important. And so be realistic about that, and don't go in with unrealistic valuations when really that's not what's important. As far as the diversity, I mean, there's no doubt we could all do much better than what we've been doing. I personally have been involved with Boston College and our entrepreneurship center there. I've been working with, kind of like you, Bob. And when I started there 5 years ago, I made it a big mission to get more diversity in our center. And, you know, people, and we've done a pretty good job with that. We've got, you know, a lot more women involved. We still can do a better job on that. And we've had some African-American involvement and minority involvement, which has been good. We can do better. I think as an investor community, we can do much better from, you know, venture and angel side. And we got to continue to work on that. And then the companies we invest in as well. I think it's really, you know, the investors of tomorrow will be the entrepreneurs of today. And so we need to do a better job of investing in more female-led, more minority-led businesses, and also hiring, you know, getting boards that are more diverse. And so we got to make those commitments. And you know, it's interesting. I've had several of my companies that sent out, one actually very profound yesterday, sent out an email to the whole staff. He copied, I'm on their board. I won't tell you the company. And he talked about how important this is. And then he said, you know, we haven't done a good job. We haven't made a commitment to do this. And talk is cheap. And it's time that we all start doing it. And so he called himself out as a CEO. and made some commitments about some of the things that he wanted to see happen in the next 6 months. And I really thought that was quite astounding, and I was really pleased about it. In fact, I sent him a note after saying how I just think that you're very vulnerable when you say that stuff, and he said it back to his team and challenged himself in front of his team, which I thought was really good.
Great. I see there's a question here that just came in. Is there an effort to invest in ventures solving pandemic-related issues? And is there such a venture network?
I must say I'm probably exactly the wrong person to ask because, we're so focused on what we do, but I think it's a great question.
Yeah, I mean, I'm not, same thing. I would be, maybe when it comes to, what's happened because of the pandemic, the workflow, those kinds of things, we certainly look at that. Although, I'm always nervous to chase the shiny penny. I think it's kind of like, when blockchain was hot, everybody who pitched you say, I got some blockchain, really, do you really have blockchain? Before that, it was AI, it's like, come on, what's your, so now it's like, we're going to help COVID. Well, let's really, if you're figuring out how to do a vaccine, phenomenal. And I'm sure that there's a lot of people working on that. And there's a lot of people that should invest in that. I'm not one of those people because I don't understand that I'm not a scientist.
We've invested in two things that I would say are related, but I don't want to, kid anybody that they are specific to the pandemic. But one is a company that was a seed investment of ours called TetraScience. And that is basically making the lab of last year be the lab of the future by bringing everything online. It's making everything digital and connecting all the instruments and the workflow and the data so that anybody can actually run the kinds of experiments that are used for things like developing new cures and vaccines, etc., much faster, much more efficiently, and of course remotely, and at high scale, so that it's possible for the data scientists and the drug developers to go out there and be more successful. I mean, it's related, but we invested in TetraScience, a long time ago, and so seeing them play that out, I think they're doing great. They've had a 7-figure order recently from one of the biggest drug manufacturers out there. That's the kind of stuff that, of course, you could say is pandemic related, but it's not because of the pandemic that we invested. That said, we will announce a company. It has a number in it, so people can remember that in the coming weeks. That is completely addressing this question that somebody asked about China and supply chains. And I would say, just to epitomize this, everybody is being Amazoned. And so, there is no such thing as a company that today can feel safe in, being able to survive what has been such a massive sea change in the way in which we buy and indeed the suppliers actually supply product today. And Amazon's changed that game with the scale at which they operate. It's very difficult for many other players to operate at a competitive level alongside them. And that's going to change too, because I think, first of all, people are going to react in this environment to, the global nature of this pandemic, and indeed to the nature of a need to be much more able to control their own destiny, which is going to cause probably more nationalism. And the net result is they're going to be kind of reinventing their supply chains to compete, not just on that basis, but also, of course, with the Amazon effect. And companies that are smart are figuring out how to do that with technology. They're basically reaggregating what was a disaggregated network, and that got consolidated around big players like Amazon in a way that they can get the same advantage, even if they're a small player, by being able to connect to all of the potential suppliers and in real time, and then track and manage that. And so, there are opportunities like that are going to come up.
Let me address this question that somebody asked, which is, what are you seeing with respect to attracting new investors to your funds? And I think it's a great question. I mean, and as somebody who remembers 2008, 2009, I mean, the market drops, almost 60% and took nearly over 3 years to get back to its pre 2008 Great Recession, levels. And money became extremely tight, and people were missing capital calls. No new funds were being created. What are you seeing now? And are either of you looking to raise money right now for a fund?
Fortunately not, but I'll tell you a story because one of our LPs, in a sanguine fashion said to us about 18 months ago when I was talking to them about fundraising, in general. He said, you know what, when we have these major disruptions, it's interesting to look at people as institutions, but it's much more important to understand where their money is coming from. And he told me the story, and obviously he doesn't want to be called out for this, but when they drew down what should have been effectively cash, it was a liquid instrument, and the institution behind it couldn't pay it. And this is literally like an on-demand note. It was 78 days before they got their cash. That's crazy. Now, we're not in that situation because that was a 2008 era situation where we did have a banking crisis. So I think we're having a different kind of crisis, and the Fed reacted unbelievably fast here.
They did.
And, trillions of dollars, I don't need to tell anybody this, have been injected into the system so that we don't have that crisis. However, I think, as I was saying earlier, some of the institutions that have relied on a business model that was based on, for example, in-person attendance, whether that's, universities or its other extremes, really, they have to rethink. And I think we shouldn't assume that anybody's just going to carry on as usual. So it's probably going to be very tough if you're a new fund, if you're a first-time fund, because it's already tough, as a first-time fund trying to raise capital. And I can tell you, even with an amazing track record, it was tough to start under school. People could say, wow, okay, so you had a 9.7x track record, but, what is that going to make you a good investor as, running a fund? And the answer is, I didn't know, they didn't know, but, we'll see. And I still don't know. We won't know for, another 5-10 years. But I think that's going to be the hard thing, Bob.
Thank you.
Yeah, I mean, I have a totally, Michael's raising his fund, and it's a much larger fund than mine, mostly through institutions. My fund is from high net individuals, most of which are from my network. I know them, I've worked with them, or, they've invested with me before, and fortunately I made them some money. Yeah, they're a little more cautious, just like I'm a little more cautious. But, I'm not in the middle of raising a fund, but I do, when I invest in new companies or existing, we run a sidecar, and they can put more money in on, so the fund will put money in, and then I raise an SPV, and they put the money in the SPV to put in. And I haven't had too much trouble when I've gone back. I've went out in the last 3 months twice, and both were for follow-ons, and I've gotten pretty much raised what I thought I would. My advice is, to anybody, and it's actually back to the entrepreneurs, is, over communication with your investors is a great thing, right? So just let them know what's going on, be fully transparent, keep in touch with them, let them know which companies are doing well. Don't be afraid to say, these are problems. We got to worry about these guys, because, one of the things investors don't like, is surprises. They hate surprises, right? So just be fully transparent and tell everybody what's going on. That's how I've been managing my group of investors. The other thing that's interesting, if you look back at venture capital over the last, 30 years, some of the best funds are the funds the vintage funds come from, 2002, not 1999, not right before the bubble burst, right after, 2009, 2010 funds. So, just like this is a great time to start a company or build a business, this is also a good time if you're starting another fund, or if you're, follow-on fund, because as we've talked about, there's better deals out there now. They're priced a little bit more attractively. This is a really good time to start a business. And if you look at some of the great companies that are, have gone public in the last few years, they were started right during the housing crisis of 2008, 2009. And, because it takes about 7 or 8 years to get to, whether it's a big M&A opportunity or get IPO. So,
yeah. So we're coming up towards the end of the hour. So I'd love to get each of you to just sort of summarize the key, recommendations, pieces of advice for the entrepreneurs.
Do you want to go first, Jere?
Sure. I mean, look, I think, I'll go back to some of the comments we've talked about. I mean, I think Michael said this, this is a time to play to win. Don't try to survive. Be bold, try new things, experiment, really invest in your product, really invest in your customers, really invest in your people. Don't be afraid to ask for help. Be transparent. I think it's all those themes that we talked about. This is a really, really difficult time. I've been through, I don't know how many, I lose count how many, 4, 5, 6. It always feels awful when you're going through it, but you will get through it. And then when we look back, it's never as bad as you think it is when you were going through it. And then, you know, the good times are never as good as you think they are when you're going through them either. So try to stay kind of even keel. Ask for help. Ask for help. And, you know, by even attending this today is a good thing. You know, hopefully you pick up one little nugget or two, little, mostly from Michael. Maybe his nuggets are better than mine. But, you know, I think that's good that you're attending it, you know.
Thank you. And Michael, last parting thoughts for the crowd?
Well, first of all, I'm going to follow Jere, and I'm sorry if I haven't been following your blog. If you're writing somewhere, there's lots of pearls of wisdom you're dropping here. So, now, I'm going to end with a question because I think it's helpful because we're all, you know, giving advice here. Whereas in reality, I don't know anybody's business that, you know, is listening. I don't know what your circumstances are. I don't know what your challenge is, etc. So the question I'd ask yourself is, you know, if you had an unfair advantage, what would it be? And if you can think about what that is, and you can figure out how to focus on it and go after it and get everybody behind you, I think you're going to do great. And everybody has an unfair advantage. Everybody is unique. For some reason or another, you've come through a unique path to wherever you are in life. So you understand something better than somebody else does. And if you've identified how you can actually apply that to a big enough problem that's worth solving, go at it. You're going to be very successful.
Great. Well, you both did a great job summarizing some great points. I'm thrilled that we had you both as panelists today because I think you gave some great insights to our entrepreneurs, and I hope they all felt it was valuable to them. So thank you for participating. Everybody on the call, thank you for being part of it. Debbie, let me turn it back to you, please.
Thank you so much, Bob. And I will just echo your thanks to Jere and to Mike. And I know we all express our thanks to you again, Bob, for leading the session. Thank you to everyone who participated. We hope you found this insightful and inspiring. I know that I certainly did. I want to let you all know that we have 2 more talks coming up in the next week or so. June 9th about building community during and after COVID-19. And on June 12th, the topic is supply chain disruptions in the pharma industry. And me or someone from my team will post the links to those in the chat if you'd like to sign up. Wishing everyone well. Have a nice rest of the day. And we hope to see you in person sometime soon. Take care.
Great. Thank you.